In this video, we'll be technically analyzing Old Mutual, and we have the monthly chart open. And in regards to this particular chart, which is the monthly chart of Old Mutual, we can see that the market had given us what seems to be a W structure over here. It's actually a multi-session W structure because it spans over multiple years, where we have the first leg at this point and the second leg at that level. And by now, everyone knows that whenever it comes to these W structures, what normally happens, and especially in the case of traders, is that a lot of traders and investors buy on the second leg of that W structure and they place their stop losses just below. So what this means, in other words, is that there's a lot of liquidity stuck at around this level over here where we have this box, and that is because, as I've said guys, a lot of people bought on that second leg of that W structure and they place their stop losses below. So all of these stop losses that are at this point represent liquidity, and liquidity is actually money that needs to be grabbed by the market at one point or another. So what I'm saying, in other words, is that as much as we have this W structure and the anticipation at this point in time is for the market to continue to move further up, what may possibly happen also is that we might see the market actually push further down from where it is, just to grab all of those stop losses that are located in this region, and then only possibly move further up. Another reason that motivates for why the market could possibly head down is the fact that we have, if you look closely, in a head and shoulders pattern rather at that point, which has a neckline at that level. And similarly guys, whenever we have these head and shoulders patterns, we want to see the neckline being broken to the bottom side, price heading back to the neckline to test it, and at that point is where we normally look for those potential selling opportunities. So as I've said, we have this head and shoulders pattern with a neckline at that point. We saw the market breaking to the bottom side of that neckline, heading back to the neckline to test it, and at this point we might potentially see the market push further down to grab all of those stop losses that I just spoke about. So what I'm saying, in other words, is that buying, or even selling for that matter, in as far as Old Mutual goes at this point in time, is a bit tricky, right? It's a bit tricky. So what's the best thing to do? In my humble opinion, the best thing to do at this point is to, especially in as far as buying goes, is to actually wait for the market to close above this neckline of this head and shoulders pattern, as well as to close above this trend line over here, right, where we had a first touch over there, or a first rejection over there, a second rejection over here, and in the future we might get a third rejection at this point, and we might see the market potentially move further down, right? Hence I say that rather wait for the market to close above this trend line over here, and then once it does so, we would love to see the market actually come back to around this area again to test it. And if it does so, at that point is where we should be looking for those potential buying opportunities, and our first take profit, in my humble opinion, should be around this level over here. Why do I say that level? That is because if you look at that level, it's actually a very strong level of resistance, and that is because we've had multiple rejections at that point, and in the future we might get another rejection at this point over here, right? But that is it in as far as my analysis goes. I just hope it makes sense, and peace out.